Good morning, ladies and gentlemen. Welcome to Bracknell and welcome to the free webinar entitled FCA Are You Ready? For the next 60 to 90 minutes we will be presenting information regarding key issues of FCA compliance. There will be a question and answer session, so please, this is interactive. Submit the questions throughout the webinar. Do it now, do it at any point, and we will come to as many of them as possible before the end of the webinar. From an AM's perspective, we have been reporting on the FCA since its inception in 2012. We've ran up to 70 stories about it, and it's come to a time now where words are not enough. There is enough information out there now to be interpreted, and I'm very pleased to have with me Martin Parr, who is ALPHERA's FCA Readiness Manager, who will take up the majority of the time this morning explaining the key points of the emerging legislation, the rules you'll be working under. And out in dealer land, it's quite clear that there is an understandable reticence amongst AM's audience to comment, to give views, to interpret it themselves. What they are more urgently requiring as time passes is exactly the clarification and guidance that we will provide today and in ongoing coverage by AM with support from ALPHERA. And so it gives me a great pleasure to hand over to Martin now. Please, Martin.
Right, good morning everybody. The first thing I need to point out is this, of course, because the FCA regulation is principles based, this is our interpretation of those principles. However, we are going through the same process as you will be on applying for authorisation for consumer credit. So first thing I'd like to look at though is which application should you be using? Now there'll be quite a number of you who are already authorised. Now those of you who are already authorised, you'll be authorised for general insurance, no doubt. So what you will be doing is applying for a variation of permissions. However, quite a number of people for general insurance have chosen to be an appointed representative of a third party. Now of course these are the people who will be then applying for limited permissions. There's also those who aren't currently authorised for general insurance or an appointed representative of anyone, or may wish to switch out of being an appointed representative for general insurance and put everything down to themselves. Those then will be looking to do full permissions. But what we should do is now go through and look at the application requirements. Now what does the FCA need to know? The FCA needs to be sure that you can identify all of your regulated activities. Plus of course they will need you to identify all of the unregulated activities you carry on. Reason for that is they want to see exactly how the regulated activities match up to the unregulated activities. Because of course your line of business is you are selling cars. A car is an unregulated activity. However, it is supported by finance which is regulated, so it's looking at how they support each other. They want to look at the regulatory risks and the business risk factors. So what risks does your business face? They need you to explain how you're going to monitor these risks. How do you control them? What controls do you have in place? They're also looking at any future developments. Are you a business that is just looking for organic growth? Maybe you're just simply having it as a family business and you're going to pass it on to other people in the family, or you're looking to expand into other franchises or other activities. But this is just some of the requirements they're looking at. Now, what the FCA have got, they have got three operational objectives. Firstly, they're securing an appropriate degree of protection for customers. In other words, this is where the TCF comes into it. Promoting effective competition in the interest of consumers. We've already seen the actions they're taking if they feel there isn't effective competition or the point of sale is to the detriment of the customer. For example, with the current study they're doing to add on insurance products. And then protecting and enhancing the integrity of the UK financial system. And we've all seen how that can be impacted in 2008 and 2009 with issues with the banking industry. But going on with the application requirements, of course there are certain things you're going to need to include within the application. And what we've broken down here is what's needed depending on whether it's a full application you're doing, a limited permissions, or just a variation of permission. For all of them is basic contact information and basic accounting information. And the reason why I've said basic accounting information even on a full application is really, it is the information that you would normally be having from your accountant. So your balance sheet, your accounts, maybe forward forecasts. One of the most important factors that we'll look at in more detail is of course the regulatory business plan. Full application, so for anyone who's not previously applied to the FCA, they will need to have a completed regulatory business plan and submit it. For those of you with limited applications, you have to have one completed. You don't have to submit it, but you have to confirm it is ready. And the FCA will ask some of the people for limited permissions for a copy of this business plan. And this isn't something you'll be able to suddenly put together within a few days. Variation, they need details of why you wish to vary your permissions. Now on that, the regulatory business plan will be perfect to show that. We ourselves are applying for a variation and we will be having a full regulatory business plan. In actual fact, the FCA's expectations are that every single business has a business plan, and this is kept up to date when there's any changes in your business. They're also looking for other bits of information that we looked at here, which is treating customers fairly, financial crime, risk assessment, compliance monitoring and compliance assessment. And we will cover these in some detail further on. Okay, the regulatory business plan. Why is this required? Now first of all, when you're looking at a business plan, is to understand your business, is to look at the future direction you may take. But when you're looking at planning, you're looking at business plan, the one bit of advice I've heard that is very relevant is write it as though you're writing it for a very cautious investor. So someone who's looking to invest in your business but they don't want to take any risk whatsoever. But they want to see the adequacy of the resources to manage the business. Do you have sufficient staff? Are they in the right place? Are the reporting lines correct? Are your IT systems up to the job? You need to once again identify business and regulatory risks, how you control and monitor them. But going round, we then get to one of the big uses of the business plan that no doubt the FCA will put it to. There's been a lot of people who've been saying the FCA haven't got a clue on motor finance. This is something they've not got into. Forget that. The FCA have been dealing with motor dealers and motor related activity for the last 10 years because of general insurance. Motor dealers sell general insurance products. However, with the regulatory business plan, when they get these plans in, they can assess and see what the playing field is like for motor finance, how dealers operate, the types of remuneration packages they have in, how they receive payments. And from then, of course, they're able to identify, is there any potential systemic risks within the industry? Are there risks they need to address fairly soon into regulation? They can identify if there's any conduct issues within our industry. Anything that doesn't tie up to exactly how they expect us to act. Also, they can understand good and bad practices, because from this there will be no doubt some applicants who have got very good practices that they would like spread amongst the industry. There'll be others who potentially have got bad practices. But as you can see from the regulatory business plan, even on limited permissions, when they take it from the smaller, medium and large dealerships and dealer groups, they can get a good understanding of how compliance will be working or needs to work within each sector. They want to understand the scope of the permissions that you're applying for, to understand that they're appropriate to your business. You're not applying for permissions you don't need. Plus, of course, are you forgetting to apply for permissions you do need? And also understand the regulated activities, as I say, you undertake. So in other words, this regulatory business plan is their window on your business. This is how they're going to see how the business works and as well how the whole industry works. But when it comes to structure, how should I structure my business plan? Well, the first thing is try not to make it just several sheets of A4 paper just with typing on it. Use diagrams and pictures where you can to explain things. Refer to the relevant sections of the FCA handbooks. So in other words, they can see what you're doing to ensure compliance with various activities. And don't assume they know anything about your business, which is why I'm saying write it as though it's for a cautious investor. These people want to know everything about your business, but they want to know how you operate. And balance customer outcomes with commerciality. They are not looking for someone who intends to be in business just to make profit. That will not get you authorised. They're looking at how you balance that with the treating customers fairly. And use numbers and statistics wherever possible. They can, a whole lot more can be explained by numbers and statistics rather than words. And the size and the scope of this, align it to the size of your business. The small businesses will not need to provide anywhere near as much information as the much larger businesses and the dealer groups. They have got far less to control. Now when it comes to the content, what must it cover? We've looked at this and we're showing an example of the types of things that we are covering within ours, what we would feel needs to be covered. First of all, where did your business come from? Where is it going? This is why it won't be a generic business plan. There'll be a lot of items that are generic to the business, but this will be specific for your business. The regulated and unregulated activities, and the products and services together with the customers and markets. So what products and services do you offer? What markets are you into? Where do you offer these products? Are you doing all dealership sales? Are you using internet? Even down to, do you sell to customers in their home? Obviously the method in which you use to sell, they're using to evaluate the risk of your business. Nextly, the purpose, vision and values of the business. This is really, you can really sell your business to the regulator. Why are you in business? What is your vision? How do you treat customers? What is the culture of the business? And culture is one thing you'll find will be coming up more and more within regulation. But what is your business strategy and your operating model? Where are you going? How do you operate? What systems and controls do you have in place to control that business? The application procedures, how are they there? But the big thing that is coming in, and no doubt this is a spin-off of the add-on insurance thematic review that they did, and their concern about point of sale and lack of competition in point of sale, is how are you going to help customers shop around for credit? So it's how are you going to assist them to make sure that your offering is the most suitable and the best product for them? Where are you going to provide them with copies of the application? When are you going to give them a copy of a quote? When do you give them a copy of the SECI? Are you making sure this is all done in good time so they've got all the information they need to be able to compare this and to be able to look at the wider market to ensure they are getting the most suitable deal for themselves? People and premises. What people are your directors, your senior management? Where are your premises? Is it a single premise? Do you have several dealerships? And how close together are they, or are you a national company? And this all comes down to the governance. How do you control this? How do you control the business? How are items reported back to the board? They're looking to make sure that the directors and the people who control the business are fully aware of everything that is happening within that business, whether it be just through management information and reporting that you have going back, or whether for larger organisations it is via committees that you have set up to look after various parts of the business and what information goes back. And then finally, compliance and risk. How do you comply now with the requirements? What are the risks within your business? How have you identified them? And how are you going to carry on with this on an ongoing basis? Remember, this is not just the application. This is now going to be for all the time you're going to be in business. So we come on to now the compliance manual. Now this is one thing that Once again, even with limited permissions, you have to ensure that you have in place. However, it must be available for inspection at any time. And they do state that within that, it must be easy to use, easy to update, and available for anyone to see. And the one thing I would say is, yes, get legal advice at times on what you need to do for the application, but can you also make sure that you have a lot of input in it. This is something you have to comply with. You have to make sure that you are able to also not only comply with the regulations, but more importantly, comply with your own compliance manual. Within this, you have to show what you've got, the skills, knowledge and expertise. How are you going to make sure people within your business have the necessary skills, have the knowledge and have the competence to do their job? How are you going to handle promotions? How are you going to handle recruitment? Scope of the business and services. Once again, this is coming back to the regulatory business plan. What is the scope of a business? What is the services you're going to offer? Because obviously this is where you're going to base your compliance manual. Communications, including financial promotions. How do you communicate to customers? What financial promotions do you have? How do you comply with all the requirements for communication and financial promotions? How are you going to comply with the conc rules? How are you going to apply with the Consumer Credit Act? And then complaint handling. Have you a complaint handling process in place? Is this compliant with regulation? And this goes beyond just saying, yes, we will respond to a complaint within 24 hours and acknowledge it. We will then do our utmost to resolve this complaint. Within 8 weeks we will have resolved it, and we will send someone their FOS referral rules. This will also go into root cause analysis. How has the complaint occurred? Why has it occurred? What can we do to prevent it? And has anyone else been affected by it? And what are we going to do for those other people who may have been affected? Financial crime. This may be an area that people are surprised about with regulation, especially when it comes to money laundering. I know that most dealers have looked at it, and as far as they're concerned on money laundering, because under regulation by the HM Revenue and Customs, the requirement there was you had to be registered if you intended to take more than the equivalent of 15,000 euros in cash for transactions. However, under FCA regulation, this has changed. It is now, if you come within the money laundering regulations, which of course dealers of high value goods do fall within that, you then have to comply with their money laundering regulations. So you have to have anti-money laundering procedures in place, and you will have to have a money laundering reporting officer. Conflicts of interest. Do you have conflicts of interest within the business? These can occur even by joint directors, directors who may be directors of other firms that may have a conflict between the two businesses. We look at ourselves and we've had to assess, where do we have conflicts of interest? Interestingly enough, one of them can come up when we get quality issues. We can get a conflict of interest on the fact that a customer would tell us one thing and a supplying dealer would tell us another. We have to resolve that. So we have to have procedures for that. And also record keeping. What records do I need to keep? Well, there are no defined timescales for a lot of these records. All the regulator says is that you must keep sufficient records, and they must be kept for a sufficient period of time to enable the regulator to assess your business. So obviously if they came into your business and asked to see some example, say 20 deal files from the last 2 years, what they don't want to hear is, sorry, we destroy all our files within a week. They need to have sufficient there. So the choice is for consumer credit, either keeping it for as long as the credit agreement is potentially live, or just look at keeping records of the transactions for, say, 3 years. So then that should be sufficient for a regulator. However, This is a decision you will have to make, and also say why it is you're making the decision on that. But these are just some of the things for the compliance manual. When you look through the guidance on the application, it will give you other aspects that they also suggest should be within a compliance manual, and also suggest you take advice if you think there should be anything else within this manual. From the manual we could go on then to compliance monitoring. Now this is an area that potentially can put a lot of people coming freshly into consumer credit regulation at the most risk, simply because they already would be going around and feel the businesses are compliant, and especially with a small one dealership type business where the directors are in there all the time, walk around the business, hear the transactions taking place, speak to the people, can see how the business runs, and are satisfied that that business is compliant. However, the one thing that may be missing is the management reporting and the information that confirms this. We are now in a stage of regulation where if it isn't written down and there isn't the proof there, it doesn't happen. So this is the one area that I'll advise everyone to look very, very closely at, and that is making sure you have everything documented, everything recorded, and you can confirm that you have monitored everything. So it is on this, have you identified the risks? Do you know where the risks lie? What reporting and management information is available? What do you already have in place? No doubt when you look at general insurance, you will no doubt have a demands and needs already there. I don't know what you do with this. Is it that you get the demands and needs filled out and it gets stored within the deal file? Or do you look at information from this, and are you reporting on this and checking them? So what checks take place? Nextly, how often will the reviews take place? How often are you doing the reporting? Who will carry out the checks, and what is kept? And also, where is it reported back to? How do you inform the board of directors and the management of the business of what is going on, of what the risks are, and more importantly, of any areas of weakness or where something may have fallen down? And this is very much something you start now and is ongoing, and it is a living type environment, because some of the monitoring that you will have in place now, you could find after a short time may not be in place in the future. It may not be of any use in the future, so you need to be constantly looking at the reporting that is going on. Now, nextly, conduct risk. Now, conduct risk, this is the identification and mitigation of risks to your customer, and this is where TCF comes in. The one thing I advise is, have you mapped your customer journey? Have you considered all the touch points? So have you mapped from how you look to obtain your customers right the way through to your last contact with the customer? Looked at all the potential risks there are to the customer in what you do, and also looked at all the mitigation that there may be within this to the customers. I mean, this is one thing that we did right from the start, is map our entire customer journey and look at the risks, look at where all the interaction is, and also map that against all the various rules and requirements of the regulation. And this information then can form the basis for your internal conduct risk reporting, because of course when you know where the risks are, you can then look at what you need to monitor to ensure that those risks are being kept under control, and also to be able to feed back where potentially there's been a breach of those. Now we come on to approved persons. Now with approved persons, this depends very much upon what permissions you are looking for. Because this year, approved person, this is a person who's being appointed to the role has to be approved by the FCA prior to their appointment. And this is what they would determine as being a controlled position, which are the very senior positions within a business. They are positions that have a significant influence over the running of the business. So in other words, if it's a limited permission you're looking for, it's the person who has responsibility for apportionment and oversight. So in other words, is responsible for the running of that business, responsible for who does what within the business. Normally that will be the chief executive or the managing director. In the absence of a chief executive or a managing director, it will be the director of the business who has overall responsibility. There can be an occasion when it's a very senior manager, but that normally would be only applying if it's an overseas company, say with no directorship within this country, but has a manager responsible for the country. So what the FCA require, they become an approved person, so that there is a person who has personal responsibility to the regulator. For permissions, or if it's a variation of permission, it is all the governing functions. So it's all directors or partners. If you are covered by money laundering regulations, which, as I say, most of you most probably will, you'd require a money laundering reporting officer to be appointed. This can be a separate person who's got specialism in that area, or it could go to the person who's got the apportionment and oversight function. Now, as we say, approval must be obtained from the FCA, but in consideration of an individual's fitness, the FCA takes into account their honesty, integrity and reputation. So when you're filling out the application, make sure you include everything, including things you may think you do not wish the regulator to know. If they subsequently find out that there's something you've missed, that has a serious impact on your honesty and integrity. There can be a lot of things that you might think they are adverse to myself, but what they're looking at, are they items that are adverse to your ability to perform your role and your ability to effectively manage that business? Because that comes within the competence and capability. And then finally, financial soundness. They want to make sure there's nothing within your financial background that will put you at risk of making correct judgments. Now, not forgetting, there are also some other items that they require. Now, there's the identification of business risks and mitigation plans to cover these risks. That also includes business continuity planning. It doesn't need to be an all singing, all dancing plan. It needs to be what you're going to do if a disaster or something adverse to your business hits. You can't use your business premises, people can't get there. What procedures do you have in place? I mean, some of you already will have, or most of you hopefully already will have, some of these procedures in place. For example, what happens if a fire breaks out? No doubt you already have procedures for evacuation of the building, but this is how you continue in business. Also, this falls within the compliance manual as well, having business risks documented. Procedures you've got in place to counter the risk of financial crime, on how your dealership may be used to further financial crime. Also, you'd need to include in this data protection. How do you keep customers' personal data secure to ensure that the data they give you can't be used by the wrong people to further crime? The procedures and management information you have there to support the fair treatment of customers, and the steps in place to counter the risk of market abuse. This will probably affect very, very few people, simply because this is more of where there can be insider trading and anything like that. So in other words, the larger dealer groups, the PLCs, or anyone who gets involved with advising businesses when it comes to takeovers, they have to have procedures in place that will ensure that there's no market abuse would take place. But as I say, whilst we're coming up now for any questions, the position is this is a big cultural change. The one thing you will see here more and more from the FCA is the culture. They are expecting a culture of where the customer is put at the centre of the business. And by looking at culture, one of the things they're saying that, yes, businesses have to make profit. However, they will look very dimly on a business that puts profit ahead of customers. So in other words, whenever you're looking at changing anything within the business, changing a process, maybe streamlining the business to make it more efficient, ensure that customer risk is also taken into account so that you are aware of the risks to customers. Now at this point we would be happy to answer any questions that you may have. So if you'd like to start, if you haven't done so already, putting the questions through.
Now, ladies and gentlemen, thank you, Martin, for that very insightful presentation. But before we continue, just please let me stress we've had some technical issues. There was some of you will have experienced a loss of transmission, loss of feed. It was a local network problem, and I say that because what I mean is that the webcast will be available to you post-event. You will be sent a link afterwards, so don't worry if you think you've missed anything, you will be able to catch up later. And if it happens again, we're hoping that it won't. Just refresh the console. Now, Martin, we have had some questions.
Yep.
One of the key ones that's been asked on several occasions is about the movement of the income from F&I and back into the metal, into the chassis. Do you believe that will be an issue?
Yeah, I believe that is potentially one of the biggest key changes that dealers could have to look at. We've already seen with the thematic review on add-on insurances where they've looked at the moment gap. From all the reports I've been reading, there's not been big concerns over the sale of gap, so whether it's been missold or not. There's not been any concerns about the usefulness of the product or whether it is a useful product. However, the concern has been over the lack of competitiveness, simply because that the FCA has seen at the point of sale that has now been put in there, and it has removed competition. So in other words, the consumer is getting a bad deal because it's being sold at the last minute and they're not being given the opportunity to go out to the marketplace. So I fully expect that income from finance insurance over the next few years could get squeezed, and so what the dealers will be needing to do, and the successful dealers will be pushing that back into the metal, or will need to push it back into the metal.
Okay, thank you. Another one. What are the implications for advised sales versus non-advised?
I think this is where people are now beginning to get conflicts between general insurance and consumer credit. Under general insurance regulation, there was the notion of advised sale and unadvised sale. Within consumer credit, that notion doesn't exist. There is no such thing as an advised sale or an unadvised sale. So what you are looking at now on consumer credit is everything is looked upon as being an advised sale. So you need to make sure that the customer is fully aware of all of the downside of a product as well as all the benefits of a product.
Okay. We've got another one just coming live. I'll read it out from the screen. In a 0% APR press ad, can zero deposit be featured in the main statement heading of an ad along with a monthly rate? If not, is it an either or situation?
Oh, I'm afraid this is one that I would say that you can have 0% along with the monthly payment, but there are a lot of other requirements that need to go within any advert. It's not just a case of just putting in a monthly payment or a rate. Okay. This you would need to run past your actual people who look at the regulation, and this is one of the things you need to have in place, a process for all your advertising to ensure that it's all compliant, so that it has run past an expert on advertising. It's an extremely complex area.
Okay, understood. One more. If the finance company is reputable, surely the only option is to offer the cheapest one available.
No, I mean, the thing is, you will have tie-ups with various finance companies. You could have a tie-up just with a single finance company. The important thing is not necessarily offer the customer the cheapest deal. It is the most suitable deal for the customer. So what deal is it that you have that suits that customer? If you deal just with one finance company, what is the product that they've got that is most suitable for them? But this also then comes into what information you're going to provide them with at the time, so that they can shop around and ensure that is the most suitable transaction for them.
That you've raised an important point there, and it's really, you use the word culture, a culture of compliance that goes beyond the documentation that you may have filed away for ready access when it's required, but that implies that the compliance will be tangible to the consumer at point of sale. How is that tangibility going to be kind of recognised, acknowledged, and made real to a customer? Are there things you must do to demonstrate your compliance to a consumer?
Yeah, there is things you must do within the sales process. You must, of course, provide the customer with the SECI, which outlines everything in connection with the agreement, all the various charges that they may incur throughout the period of the agreement. There's an adequate explanations. You must provide the customer with the adequate explanations. However, it is gearing this adequate explanations to the customer's specific needs. So in other words, it's ensuring that you're not pushing the product that earns you the most money, or the product you may wish to pursue. It's making sure it is the most suitable for the customer, and you are ensuring that it's suitable for the customer's needs. You're not going to have products that are going to suit 100% of the customers 100% of the time, but it's the most suitable. If there are areas where it may not quite be suitable for that customer, but it's still the best one that you've got for them, ensure that they're aware of the areas that it's not suitable. I think where they'll see the tangibility is the different relationship they'll have. They probably won't feel anymore that they're being sold. The feeling will be they're talking to someone who's giving them genuine advice and has got genuine concern as to the suitability of that product. They're not looking to make money out of them, they're looking to make sure that that's the most suitable.
And how will the FCA establish whether there is a culture within the business that meets its requirements? How is that measured?
That would be measured by a whole raft of items. Number one, if they come into a business, they will look, first of all, they will speak to the people within the business, speak to the directors to find their understanding of what having a culture of treating customers fairly is. They'll speak to the senior managers, no doubt. They could even speak to the receptionist.
Yes, that's my point. Yeah.
And they're looking to see that everyone has got the same understanding, because we remember culture is driven from the top. And within the culture, it's how do you reward people? How do you promote people? So in other words, within sales, are the promotions going to the people who sell the most vehicles, who produce the most profit? Or are you also going to align that with their behaviours? The people who are treating the customers the best. They may not necessarily be the ones who make the most sales, because they're making sure that that is the most suitable for the customer. However, they will be, no doubt, the salesman that in a way you may least want to lose, because they've got the customers always coming back and asking for them. They're the ones you've got to fear the customer will go.
Yeah, right. Okay, thank you. A very quick one, an administrative one really. Damien wants to know, will the slides be distributed after the webinar?
Yes, it will be.
Absolutely, yeah.
Yep.
Okay. Now, back onto the issue at hand. Is the compliance manual not a part of your policy manual anyway?
A compliance manual, policy manual, they can be very much one and the same. A lot can depend on various sizes of businesses and all the aspects you've got. However, what they're looking for is there is a central document that all the people within a business can go to. There's a central reference point. So you've got the compliance manual, it's there. It may well just signal people towards other manuals or other policies you have. But there's one central place, and this is why I'm saying it must be something that people can read. So make sure it is made in a readable format. It's not just completely full of legal jargon.
Okay, thank you. And question now, is the role of the business manager, well, it's quite a strong word, redundant if we no longer make money from F&I streams? Isn't that a worst case scenario?
I don't feel it's redundant. There will still be ability to make money from F&I. However, the money that you can make, it may be that it's not as much as it is now. Or maybe it has to be spread amongst more people. But I see the business manager role changing a little bit. It won't be the old traditional profit centre role. So in other words, a role to see how much profit can we make out of this customer. It would be more of an advisory role to give the advice to the customers, ensure that the customers are getting the correct product. Someone the customers feel happy to refer back to with any queries or any areas of concern they have in the future. This is the person that they come back to.
Okay. Question from another attendee to the webinar. I want to become a principal for my group. but miss the 31st of August date set by the FCA, can I still apply?
I don't see any reason why not, because you will have a landing slot yourself, because that will have been after the 31st of August. The reason they had this specific section beforehand for people wishing to be principals was because there was a concern that if they didn't have people who wanted to be principals early, it would give an unfair competitive advantage to people with earlier landing slots. So what you'll find on this, yes, there are dealer groups who've applied where they want principal and ARs. However, within the other scheme of things, a lot of the ones who apply for this may be people who are looking to be a principal just to provide compliance solutions. So my feeling would be that you could probably still apply within your normal landing slot and explain that you want to be a principal, and the other dealerships within your group will be appointed representatives. However, one word of caution, if you're doing that, please make sure that all the dealerships within your group that you want to have as appointed representatives, you make an application before their interim permission period ends if you haven't already received your full authorisation. Otherwise you will find that between the time that you receive your full authorisation and when their landing slot is finished, they won't be able to sell consumer credit.
Understood. I think we may have touched on this, but I'll ask it again just in case the answer wasn't clear. But it's about the shift of F&I income to the metal, resulting in little improvement in, actually this is the point I guess, little improvement in overall cost to the consumer. Net.
That's it. Net, I doubt whether there will be much of a difference to the consumer. The thing is, yes, there'll be a difference to the consumer if people continually discount vehicles to the level that they are, but unfortunately, as we all know, if people continue to discount vehicles to the level they are and haven't got the income coming in, it can have serious financial implications to some dealers. So it's just a natural course of evolving.
Mm-hmm. And one of the points you mentioned in the presentation was about having sufficient staff. Mm-hmm. What does that mean? How do you know which side of the line you fall, whether you have sufficient or not?
That, very difficult question. I mean, most of us working for various businesses will always say, we need more staff. Now, it's making sure you've got not only sufficient staff, but you've got sufficient staff within the correct areas. So in other words, as far as the regulator would be concerned, you've got sufficient staff to ensure that the dealership is compliant, is able to meet all its regulatory requirements. They don't want to see compliance with regulation as being something that is just pushed to one side to one person in the corner. It has to be understood by everyone in the business.
Thanks. What part of the industry do you feel will incur the largest impact from the change? Now, I think they're looking at sector, they mean supermarkets, independents, the franchise sector. Is there going to be a differentiation, a difference?
I don't think it's going to mean any difference between any of these sectors. I think the ones that it will impact the most is the ones that have got the most reliance upon your F&I income. That's the ones who potentially have got the biggest impact. If you've got lesser reliance on F&I income, then there may be less of an impact on your overall business. Okay.
We're just waiting for one more question to come in. Is there any areas of the presentation that you felt, while we have time, you'd like to put some more emphasis on at this point?
Well, I think it is really to do with the compliance. It is this ensuring that the compliance is within the business. It's probably one of the hardest things to look at, because all of us within business like to think that we treat our customers fairly. We all like to say that we have good customer satisfaction levels, and this is one of the things we strive to have, good levels of customer satisfaction. Now, customer satisfaction is a very, very good indicator of whether you're treating the customer well or not, because obviously if you've got very poor levels of customer satisfaction, you've got a problem. However, as when it was the FSA put it to me when they were doing a Treating Customers Fairly conference, a satisfied customer may be a customer who doesn't realise they've been ripped off yet, which was a nice way they had to put it. But yes, it was a way of putting that don't rely wholly upon customer satisfaction. Personally, I look at it is that any business can look good if everything's going well and you don't have an issue. It's how do they resolve complaints, how do they resolve issues, how do they prevent complaints happening.
Okay. ALPHERA has been doing road shows for 6 months, is that correct?
Yes.
You did one yesterday?
Yes.
What was the main issue that you felt coming from the delegates to that they were most concerned about at this stage?
I think the main issue was coming from a lack of understanding, because right at the beginning we asked a simple question of how many people have looked at the application form, and to me there were surprisingly few people who looked at the application form, especially in view of the complexity and the landing slots all around us. But there was still this issue of which application do I make?
Let's just address that then, the timeliness, the timeline. There is a timeline to this. You talk about landing slots. Now, what is going wrong if you're not up to speed, you're not up to pace with the timeline that's been provided?
Obviously, because there's 50,000 companies, the FCA wanted to ensure that they could handle this in a controlled manner. Because they know otherwise, if they left it open, with 50,000 you could get 49,000 in the first 23 months. Sorry, 1,000 in the first 23 months and 49,000 a month, 24. So they've looked at the various sectors. It was done on the permissions that people have requested, and they put it into 3-month landing slot areas. You can't apply for before the beginning of 3 months. However, your application must be in at the end. If you have failed to get your application in at the end, you cannot offer consumer credit until you have received full authorisation. So in other words, your interim permission expires. So for a lot of dealers, a lot of people in the motor industry, that will put them out of business. So it's vital that you look at this very, very quickly and urgently, and you have that application in before the end of your landing slot to ensure that your interim permission carries on.
Okay. Can a lender offer a dealer a volume-based agreement?
This is a very, very awkward situation. The FCA doesn't give definitive rules on what you can and can't do on financial incentives. However, there is guidance on financial incentive, and they have high-risk financial incentives. So one of the high-risk ones is volume-based incentives. What you have to look at is, if you are doing a volume-based incentive, how do you gear this to ensure there is no customer risk? So especially when you're reaching that deal that puts you onto another band, or that deal that gives you a retrospective commission all the way back, how do you make sure that is not missold to get the commission? By that, as it's saying, can I offer a volume related? I'm wondering if this is someone who is supplying finance facilities to a dealership, or if they are just merely within a dealership and this is how they reward their salesmen. Because what we have to remember is, as finance lenders, the incentive schemes that we offer drive dealer behaviours. So it's no use thinking that we can offer what we like. It's down to the dealers to sort out there's no customer detriment. We will drive dealer behaviours. Okay,
so the person that asked that question, if they'd like to provide some clarification, we're very welcome to take that on board as well. Another question, there's a great deal of discussion surrounding the cooling off period of GAP products relating to the POS. There's talk of 48 hours, but many dealers look to deliver a vehicle within that period.
Right, now 48 hours, I think there'll be a lot of dealers would wish it was 48 hours. They've been looking at about 7 days or potentially 14 days cooling off period. What was waiting for clarification on is when the cooling off period starts. Is it a vehicle order or is it a vehicle delivery? But no matter which, whilst you can introduce GAP to a customer, you cannot complete the sale. It's similar to what came in for PPI, to have this cooling off period. The idea is to ensure the customer has time to make sure that that is the best product within the marketplace, and to ensure that it's competitively priced. But it is a big fear within the motor industry at the moment, because of course potentially there's a loss of gap earning.
When do you expect the clarification on that? Indication of when it will be made clear?
We were expecting clarification Probably at the end of this year, beginning of next year. Timescales seem to have slipped a little bit, but I would anticipate well before the end of 2015, we should have not only clarification, but it may well be that the requirements are in.
Okay. Martin, I had a request for you to clarify your views on full application or variations on permission for those that are already regulated for general insurance. How different are the two processes?
Well, if you're already regulated for general insurance, you already have full permissions, as they call it. You already are authorised by the FCA. So, in other words, all you're applying for is a variation of permission. Limited permissions is not open to you. You cannot have a full permission in one category and then limited permissions in the other. The people within the industry who potentially would have to apply for full permission is a credit broker who that is their full-time work, is not ancillary to their business, or if someone that I very much doubt wants to give up being an appointed representative for general insurance and have full regulation on them all. But the two processes are very much the same. You're going to have to give them very much the same information. For ourselves, we're applying for a variation, but we're still doing the regulatory business plan, ensuring it's all there, all up to date, and putting that in with our application.
Another question. We currently have one company fully authorised by FCA for general insurance, and the other companies are ARs. Can this pattern be kept for consumer credit?
Yes, it can. This is a pattern that we are aware several dealer groups now are going down the line, that they have one of their dealers or one business within the group that does consumer credit as well, but is authorised for general insurance and has them all hanging off as ARs. I mean, the reason people were concerned about going down the AR route and having appointed representatives was the regulatory requirements. But if you're part of a group, the expectation of the FCA on how you control that will be no different to how they'd expect you to control a group. So, yeah, it's getting more and more common now.
You've mentioned the importance of the October 1st date. Are there any other dates within the next few months that dealers need to be aware of?
Well, the landing slots are geared depending on the region, so people have already had their dates. I believe it's the north of England that was October the 1st was the beginning of their landing slot. So, of course, that runs for 3 months. So we'll end at the end of December. Then for London, the South East, everything's beginning in November through to the end of January. And from memory, I think there's some other areas, Scotland, I think the very west of the country, is beginning in December. So, in other words, there's a 3-month window in which most of the dealers now will be having to get their applications in.
There's a question here. Have the implemented changes, RE internal incentives around selling between finance agreements such as PCP versus HP? Does that make sense?
The implemented changes regarding internal... I think what this is looking at is that are there changes have been implemented, because obviously at the moment, because of the way the products have been structured, they can carry different levels of commission. And so there are people now looking at whether it is possible to look at saying having a level amount of commission, I would think, between PCP and HP, so it makes no difference whether you sell HP or PCP as to the amount of commission which is earned. I mean, which is the ideal position to be in, because if the salesman selling a product earns the same, whichever the product is, there's no incentive to choose one over the other for the customer, so they're more likely to choose the best one for the customer.
Right. There's a question still being typed by the attendees. I'll read it out as far as we can go. Some dealers have already ceased selling of add-ons and are advising consumers to research and purchase via third-party resellers. Is this a risk
of consumers? Offer products.
I'll read it all again now. Some dealers have already ceased selling of add-ons and are advising consumers to research and purchase via third-party resellers. Does this mean a risk of consumers not being offered the full protection?
I think this is one of the big things within dealers. I know there was the thing that they were using FCA regulation as a thing that is treating customers fairly to offer them every single product that they could in the hope potentially that some stuck. The fact that some are now advising consumers to research and make their own decisions, that is more or less going more down the lines that the regulator probably is looking at, to ensure that customers are advised to go out and research and make sure they've got the correct product and they've got the most suitable one for them.
But is that good customer service?
Well, as to whether it's good customer service, as we all know, there can be levels of cover or certain types of cover that the customer may not think about at all unless it comes in. And now, for example, Gap is probably one of those products that if it wasn't for dealers advising customers of the product, very few people would have Gap. And there's probably a lot of customers there who are very thankful they've had Gap.
That's the point, isn't it? It's a fantastic product the minute you need it, isn't it?
Oh, that's it.
Yeah.
And funny enough, we have had, and most of the people within the industry will say, they probably had, even though it's only a handful, but more complaints in to say they weren't advised that they should have this product than it's been missold. And this is from people who subsequently have written the car off. Inevitably, you do find this is customers who've turned down the product when it's been asked of them, but yeah.
Yeah, sure. Another one relating to lender questions, volume questions. I've heard that different dealers say that they have been offered volume-based on agreement, and this came from the FCA. Is this likely to be accurate, true?
No.
Why are you so confident?
Because the FCA in their guidance considers volume-based agreements to being high risk. They identify any sort of incentive scheme that is based upon volume, it's got volume overriders, if it's placed upon the period, the amount of advance, anything like that, if it varies between the period and the amount of the advance, they are higher risk. So you have to be able to identify the risk to the customer and what you do to mitigate them. So I very much doubt that it will be an agreement by the FCA. Yes, there are lenders who are revising their financial incentive schemes. They are revising the commission packages that go through to dealers, and those can be revised in the light of regulation to try and make them potentially more compliant than they currently are, or to take a lot of the risk out of those schemes. But as the FCA will not say, we recommend this product, this scheme, or we don't recommend this scheme. They don't give advice like that.
Okay. Here's an interesting question about the practicalities of the process now, and it's calling on your experiences from the road shows over the last few months. How long are people saying that it is taking them to complete the application?
We're getting very little feedback on how long it's taking to complete the application, because quite obviously people are coming in and they're getting amazed at how much work needs to be going in. But from people who've been doing a lot of work on it, this is something that is taking them several weeks to complete. I mean, obviously, there's the various aspects and everything, the bits they're having to draw from all round the business to make sure the monitor is in place. But it's not something that you can leave until the last week of your landing slot. If you haven't started now, you should be starting straight away, because it is a good couple of months' work probably.
I would take it then that there isn't a template anywhere that anyone could happily, satisfactorily copy and paste. It's got to be bespoke to your business, and if it's not, it will be clear to the FCA.
It'll be clear to the FCA that if it's not bespoke. The FCA, on their website, you will find application forms. Even though you will be doing an online application, there's application forms so you can see the questions, and alongside it they do have guidance notes of what they're expecting to see within the application, which is of course where we've gained a lot of the information we've been giving in the roadshows by going through all the guidance notes that the FCA have supplied.
Okay. Do you feel, it's called advertising portals, but such as Motors, the AA, should be authorised? They don't sell finance products. but do advertise on dealers' behalf?
I suspect they will come within the attention of the FCA. If you think the FCA has already looked at the websites of the insurers, so all these price comparison websites, and they've already raised issues about the comparison websites. I mean, it's one of the things we show within our roadshow on how a couple of the insurance comparison websites are actually owned by an insurer. Or
very true. And again, is there clarity
Yeah.
for the consumer on that? Do they know what
They
they're
don't
looking
know
at?
that.
Isn't that an issue in itself?
Yeah, because everything's got to be clear. And I suspect that once consumer credit is up and running, these ones offering price comparison website type things on consumer credit, they'll be looking at the clarity of those and then coming back and saying whether they feel they are compliant or not.
Okay. Can we scroll down a little bit, please? Thank you. Is 2015 going to be a challenging year for our industry whilst we are waiting for FCA authorisation?
Oh, I think every year sometimes can be a challenging year, because the trouble is regulation changes so quickly. When you think it's not that long ago we had to cope with CCD and the challenges that brought. Yeah, I think 2015 will be a challenging year for the industry, not only because of FCA authorisation, but also the challenges that the things such as the gap insurance will bring as well.
Which will have the biggest impact?
Long term,
looking at the end.
Looking
out of
outside
2015,
2016 onwards, potentially FCA regulation. It depends how well you embrace FCA regulation. For those who embrace it and look how they can feed this into their businesses and how they can comply well with this, this could be a great improvement. It could attract more customers to their dealerships, because of course the people who don't embrace this and continue to try and operate under the old, more traditional type ways of looking at customers and how you sell products to customers, could find they rapidly start losing customers to dealers who embrace this.
In terms of demonstrating how you embrace the legislation, the compliance, is there something that can be broadcast to your customer base? Is there not a kite mark so much, but is there a gold standard that you could apply to your marketing, for example, or the way that you go to market, communicate with your consumers, your customers? Or is it merely going to be purely the way you operate?
It's purely the way you operate. It's making sure that when you go to market to the customers, you know the customers you want to attract, you know the customers you're going for. And the concern at the moment on marketing, the FCA's already looked at some marketing and they've already expressed concerns that within motor finance, that there's adverts out there that give a payment, they give a lot of detail, but it's not clear to the customer whether or not it's a hire agreement or they can ultimately get ownership.
It's a fundamental one, isn't it? Question.
Yeah, so it's fundamentally, it's the one thing they say, must be clear, fair and not misleading. So it's been totally transparent.
Okay. Another question we've had from one of our audience. I've been approached to become an AR. Is this advisable and what are the risks?
Yeah, I do know there are one or two companies out there that are offering AR status. However, on this, I don't know what the position will be in the future. The only reason I say that is, whilst there's been companies that's gone out and they're looking to take people on as AR, as appointed representatives, to my knowledge, we haven't been approached yet as to whether we would be whether they want to offer our finance facilities. So in other words, I don't know what their requirements are of us, and I don't know what the requirements we would have of them will be as yet, because what you remember is, traditionally we've offered our facilities directly to the dealer. If they become an appointed representative, we have to go via the principal. Now, it could be that for a lot of people, it's an excellent idea to be an appointed representative. However, what you need to look at is, if you are a franchise dealer, if for any reason there's a dispute between the principal and the motor finance company, and the finance then isn't available to you, you won't be able to take part in any of the incentives that are there, or the packages that can be there to sell new cars, because you may not be able to use that finance company because it's not going to be under your control. Right. If, once we see what the requirements are of the principals and whether we're happy with them and they are happy with us, then I may be in a better position to answer that.
Okay, understood. Someone has asked, how can we sell GAP compliantly? Is that a topic for another day? Or?
I would think it's a topic for another day. I mean, if someone's concerned about how they can sell GAP compliantly at the moment when the regulations have been around for this number of years, I think what they're looking at more potentially is how can we sell GAP compliantly under the proposed new rules, and we'll only know that once we know exactly what the rules are.
Right, one more. We are a dealer group in the parent holding company, if authorised by FCA for general insurance, with the dealer group being AR. Is that a question?
If the dealer group, yeah, if the parent holding company, the dealer, the group, is the principal for general insurance, and all the dealerships are hanging off that as appointed representatives,
Right.
they then have a choice. Either they can go the same structure within regulations to make that holding company a principal and have all the dealerships hanging off that as appointed representatives,
Okay.
or they can then turn around and have all of the individual dealers as limited permissions.
Mm-hmm.
However, what you've got to remember is if they're all limited permissions, each one of those has to make a return, whereas if it's all hanging off as ARs, it's one return.
Okay. We were talking earlier, prior to the webinar, about the impact on acquisition activity in the marketplace. Now, 2014 has been particularly vibrant. 2015 shows signs of being the same. Will this impact on the dynamic element of the market in terms of buying and selling businesses?
It can do. It's going to put a much longer potential time on it.
Why?
Simply
so?
because consumer credit license, normally you could get your consumer credit license within about 28 days. When you apply for FCA authorisation, they allow themselves up to 6 months to look at a completed application. So in other words, when the application reaches them, it's complete, there's no additional questions needed. So a complete full application can take up to 6 months. If it's not complete, they can take up to a year. So, and especially before you reach the end of 2016, before the end of 2016, they are going to be full up with applications, yeah, because this goes on till end of March 2016. So you would just join AQ.
Yes, so, okay. Now, a question regarding the practicalities. Is it correct that dependent on the application, the type of application, they can vary from a 12-page document to a 54-page document?
Well, I've only seen about 3 different applications, and yes, it can be shorter or longer depending on the type of application. The idea is that with the online application process, how you answer one question will lead on to what the next question should be. But yeah, it's going to be quite a daunting document for quite a lot of people to complete. However, what people have to remember, it isn't just an application form. That bit is the simple bit. It is all the ancillary documentation and paperwork you needed to complete your regulatory business plan. I spoke to one dealer who, after one of our roadshows, said they completed theirs. They thought they'd only covered the minimum amount they needed to, and they'd reached 40 pages.
Okay, there's a warning there.
So,
all right, that's the last of the questions, but we will continue to take them and we will do our best to answer them after the live broadcast that we're now drawing to a close. It's important for me to stress that the ALPHERA has an FCA compliance page. The information will be available on there from today, and it will be added to as more information becomes available. And also AM is holding a F&I compliance conference in November at Oxford Belfry. There is details in the events section of our website, and we will be adding to that as the programme for that day become finalised. So just leaves me to say thank you very much to Martin, thank you very much to ALPHERA. This is Jeremy Bennett, the editor of AM, signing out. Thank you very much.